PubMatic Inc. is facing a class action lawsuit led by the Schall law firm, alleging violations of the Securities Exchange Act of 1934. The lawsuit claims that PubMatic made false and misleading statements by failing to disclose that a significant demand-side platform, DSP buyer, was moving its clients to a competitor, which negatively impacted the company's inventory and ad spend. This revelation led to financial losses for investors who purchased securities between February 27, 2025 and August 11, 2025. The lawsuit invites affected investors to join the case to potentially recover their losses before the October 20, 2025 deadline. The allegations, if proven, could have significant implications for PubMatic's market reputation and financial stability. The company's failure to disclose critical client shifts may lead to a loss of investor confidence, potentially affecting its stock price and future financial disclosures. This case underscores the importance of transparency in corporate communications, particularly in the competitive ad tech industry where client relationships are pivotal. As the class has yet to be certified, investors are encouraged to consider their options carefully in consultation with legal professionals.
BMW has allocated over £200 million to address potential liabilities arising from a motor finance mis-selling scandal in the UK, marking a significant financial provision compared to the £70.3 million set aside the previous year. This move comes as the Financial Conduct Authority, FCA, prepares to implement an industry-wide redress scheme next year to compensate consumers who were inadequately informed about their car finance agreements. The FCA estimates that affected customers could receive up to £950 each in compensation. This development follows a mixed Supreme Court ruling in July, which partially favored lenders while leaving room for further claims. Other major financial institutions have also made substantial provisions, with Lloyds Banking Group leading with £1.2 billion, followed by Santander and Close Brothers at £295 million and £165 million, respectively. The FCA has emphasized the importance of cooperation among lenders and claim management companies to ensure the scheme's success without destabilizing the market. The regulator has warned that an overly burdensome compensation scheme could potentially drive some firms out of business, reducing competition and increasing costs for consumers seeking car finance in the future.
The gold market is experiencing a strong rally, nearing record highs, as investors anticipate potential interest rate cuts by the Federal Reserve. The speculation around the Fed's monetary policy adjustments is driving demand for gold. Traditionally seen as a hedge against inflation and economic uncertainty, the precious metals price movement is closely watched by market participants, especially with upcoming speeches from Fed Chair Jerome Powell and other officials, which could signal shifts in the Fed's economic outlook and influence short-term market dynamics. In the equity market, NVIDIA's announcement of a $100 billion strategic partnership with OpenAI has bolstered its stock, contributing to a rally in major indices like the S&P 500. This development highlights the growing importance of artificial intelligence in driving corporate strategies and market valuations. Meanwhile, Bitcoin has retreated to $113,000. Reflecting broader economic uncertainties that are also affecting altcoins. The Forex market is also seeing volatility, with the Euro-USD weakening in anticipation of U.S. economic updates and Fed commentary, while the GBP-USD has rebounded slightly after a losing streak. These currency movements underscore the fragile market sentiment, where even minor shifts in tone from central bank officials can trigger significant market reactions.
Rainbow Rare Earths Limited, LON RBW, saw its stock price surge by 17.4% during midday trading on Monday, reaching a high of GBX 18.24. This uptick is notable given the trading volume of 1,243,443 shares, which is a 71% increase from the average session volume. The stock, which previously closed at GBX 15.3321, has been buoyed by positive analyst sentiment, with Berenberg Bank reaffirming a buy rating and setting a price target of GBX34. This suggests a potential upside, reflecting confidence in Rainbow Rare Earth's strategic positioning in the rare earth elements market, critical for green energy technologies. The company's focus on developing the Phalaborwa rare earths project in South Africa and the Uberaba project in Brazil positions it as a key player in establishing an independent supply chain for rare earth elements. These elements, including neodymium, praseodymium, dysprosium, and terbium, are essential for permanent magnets used in various green technologies. Despite its promising prospects, the company faces financial challenges, highlighted by its high debt-to-equity ratio of 3.34 and an unusual P/E ratio of -2,400.00, indicating current financial losses. The stock's beta of 2.25 suggests higher volatility compared to the market, which might appeal to risk-tolerant investors looking to capitalize on its growth potential amid the global shift towards renewable energy.
The cryptocurrency market is experiencing a pivotal moment as the current altcoin pump, characterized by significant price increases across various digital assets, approaches its conclusion. According to Minule, a prominent crypto analyst, the cyclical surge in altcoin prices is showing signs of winding down, with Ethereum's market dominance declining and liquidity flowing into other altcoins. This shift has initially fueled altcoin price increases, but now signals a potential end to the cycle. Ethereum's dominance is crucial as it often acts as a bellwether for the broader altcoin market. A decline in its dominance typically indicates a redistribution of capital, reflecting increased risk-taking among traders. As this altcoin pump nears its end, investors face both challenges and opportunities. The market may experience heightened volatility and potential corrections as early investors take profits, leading to significant price drops for many altcoins. Conversely, this phase presents opportunities for profit-taking, portfolio rebalancing, and identifying strong projects as the market cools down. Investors are advised to prepare for the next altcoin cycle by conducting diligent research, managing risk through strategies like stop-loss orders, and diversifying investments across different sectors. Understanding these cyclical patterns is essential for long-term success in the dynamic crypto landscape.
During the second quarter of 2025, both IFM Investors Thai Limited and Grove Bank and Trust increased their stakes in Alphabet Inc., Nasdaq, Google. Reflecting a broader trend among institutional investors, IFM Investors expanded its holding by 4.8%, now owning 1,106,600 shares valued at approximately $195.02 million, making Alphabet the seventh largest holding in its portfolio. Grove Bank and Trust increased its stake by 2.1%, bringing its total to 34,372 shares valued at around $6.06 million. These moves are in line with other institutional investors like Nuveen LLC and Gamma Investing LLC, who have also bolstered their positions in the company. Alphabet's stock has been trading up, opening at $254.72, with a market capitalization of $3.08 trillion. This upward trajectory is supported by a robust earnings report that exceeded analyst expectations. The company reported Q2 earnings per share of $2.31, surpassing the consensus estimate of $2.15, and generated $96.43 billion in revenue, beating the anticipated $93.60 billion. Alphabet's strong financial metrics, including a return on equity of 34.31% and a net margin of 31.12%, have contributed to positive market sentiment. Analysts have responded favorably, with firms such as Citigroup, Needham & Company LLC, and Tigris Financial raising their price targets and maintaining strong buy ratings. The consensus rating remains a moderate buy, with an average target price of $225.54, although some targets are as high as $280. Despite insider trading activities, including significant stock sales by executives like CEO Sundar Pichai, insiders still hold 11.55% of the company, indicating continued confidence in its prospects. Alphabet's strategic positioning through its diverse offerings across Google Services, Google Cloud, and other bet segments continues to attract investor interest, suggesting sustained growth potential and making the company a focal point for both institutional and retail investors.
WP Carey Inc., NYSE, WPC, a prominent real estate investment trust, REIT, has seen notable changes in its institutional ownership, with IFM Investors Thai Limited reducing its stake by 7.5% in the second quarter, now holding shares valued at approximately $4.87 million. This adjustment is part of a broader trend among institutional investors, such as Exchange Traded Concepts LLC and Wealth Enhancement Advisory Services LLC, who have either increased their holdings or initiated new positions in WP Carey during the same period. Such movements indicate a mixed sentiment towards the company's stock, reflecting cautious optimism amidst market fluctuations. The company's recent performance has been robust, with a reported earnings per share (EPS) of $1.28 for the latest quarter, surpassing analyst expectations of $1.23. This performance is supported by a 10.5% increase in revenue year-over-year, reaching $430.78 million. Analysts maintain a consensus hold rating on WP Carey, with a target price of $67.22, reflecting a cautious outlook despite recent upgrades from Wells Fargo and Evercore ISI. The company's strategic focus on high-quality, operationally critical commercial real estate, combined with a recent dividend increase to 91 cents per share, underscores its commitment to delivering shareholder value, offering a yield of 5.4%, with a market cap of $14.71 billion and a diversified portfolio. WP Carey continues to be a significant player in the right sector. The firm's financial health, marked by a debt-to-equity ratio of 0.97 and a stable dividend payout, positions it well to navigate the current economic landscape. As the company sets its sights on a projected FY 2025 EPS of 4.870 to 4.950, investors will be closely monitoring its strategic initiatives and market conditions that could influence future performance.
Kraft Heinz Company, Nasdaq, KHC, has seen a notable increase in institutional investment, with IFM Investors Thai Limited raising its stake by 5.3% during the second quarter, now holding shares worth $4.52 million. This move is part of a broader trend among hedge funds and institutional investors adjusting their positions in Kraft Heinz, with 78.17% of the company's stock currently held by such entities. Despite this institutional interest, Kraft Heinz's stock performance has been under scrutiny, with the company's shares opening at $26.42, reflecting a market cap of $31.27 billion and a negative P/E ratio of -5.88, indicating negative earnings. Analysts have mixed outlooks on Kraft Heinz, with a consensus rating of reduce and an average price target of $29.76, while Morgan Stanley, Stifel Nicolaus, and UBS Group have set price targets around $28 to $29. Goldman Sachs has upgraded its rating from sell to neutral, suggesting some potential for stabilization. Kraft Heinz reported a quarterly earnings per share of 69 cents, surpassing expectations, but year-over-year revenue declined by 1.9%. The company maintains a high dividend yield of 6.1%, though its payout ratio is negative, reflecting ongoing financial challenges. As Kraft Heinz navigates these complexities, its financial strategy and market performance remain closely watched by investors.
Exchange Traded Concepts LLC has increased its stake in Wynn Resorts Limited (Nasdaq Wynn) by 19.8% during the second quarter, as per the latest SEC Form 13F filing. The firm now holds 22,731 shares, valued at approximately $2.13 million. This move aligns with a broader trend among institutional investors and hedge funds, such as Davenport and Company LLC and Nuveen LLC, which have also recently acquired significant stakes in the casino operator. Institutional investors now own a substantial 88.64% of Wynn Resorts stock, indicating strong institutional confidence in the company's prospects. Analysts have shown a favorable outlook on Wynn Resorts, with firms like Macquarie, Mizuho, and Jefferies Financial Group raising their target prices and issuing buy ratings. The stock opened at $129.52 on Monday, nearing its 12-month high of $130.84, reflecting positive market sentiment. Despite a slight earnings per share EPS miss in the last quarter, where Wynn Resorts reported $1.09 against a consensus of $1.20, the company's revenue of $1.74 billion met analyst expectations. The company's strategic focus on luxury integrated resorts, including operations in Macau and Las Vegas, positions it well for potential growth, as indicated by the projected EPS of 5.17 for the current year. Wynn Resorts continues to offer dividends, with a recent quarterly payout of 25 cents per share, yielding an annualized dividend of $1 and a yield of 0.8%. The company's strategic expansions and strong institutional backing suggest a robust outlook, though investors should remain mindful of market volatility and regulatory developments in the gaming industry.
Exchange Traded Concepts LLC has increased its stake in Fresh Del Monte Produce Inc., NYSE, FDP, by 4.3% during the second quarter, now holding 62,573 shares valued at approximately $2,029,000. This move is part of a broader trend among institutional investors, with firms like Waterfront Wealth Inc. and the New York State Teachers Retirement System also augmenting their positions in Fresh Del Monte. Currently, 64.83% of Fresh Del Monte's stock is owned by institutional investors, suggesting strong institutional confidence in the company's performance and future prospects. Fresh Del Monte recently reported robust quarterly earnings, with a revenue increase of 3.8% year over year, reaching $1.18 billion. The company's earnings per share, EPS, of $1.23 exceeded analyst expectations by 28 cents, indicating strong operational performance. Fresh Del Monte's financial health is further underscored by a low debt-to-equity ratio of 0.10 and a respectable return on equity of 6.84%. Despite these positive indicators, the company's stock has experienced recent insider selling, with significant shares offloaded by senior executives. Nevertheless, the company's stable dividend yield of 3.4% and a market capitalization of $1.71 billion suggest it remains a solid investment for income-focused investors.